companies I'm looking at and I read the annual reports of its competitors. That is the main source of material. Hey, these are not my words. These are the words of one of the greatest investors of all time. Yes, my friends, Warren Buffett. So, after hearing this, there might be one question that arises in your mind. What is an annual report? Well, that's a good question. So, as the name says, annual report. Annual, 1 year report. The report of the company given to its shareholders or public in general of the past financial year is called an annual report. Now, what is a financial year? Is it the year starting from January to December? No. Financial year in India starts from 1st April and ends on 31st March of the next year. For example, the financial year 2020 would be 1st April of 2019 to 31st March of 2020 is one financial year. So the report from 1st April of 2019 to 31st March 2020 is an annual report. So the second question that arises in mind is that what can an annual report tell you? It tells you about the products, it tells you about the services provided by the company, it tells you whether the company has made a profit, it tells you whether the company has made a loss, it tells you what the vision of the company is, what the vision of the director is, what the vision of the chairman is. Where does the company see itself in the next 5 to 10 years? All of this is told in an annual report. Not just this, a lot more is told in an annual report. But there's one small problem over here. The annual report is 500 pages long. Do you think that you will read a 500 pages long report to invest in a company? 500 pages is just too long, right? So I'll tell you the parts in this video. Which parts are important to read an annual report? You don't have to read the whole annual report to understand. There are just some sections that you have to focus on, and if you get a grip over those sections, you will get to know a lot about the company. I guarantee you that. Now, before telling how to read about a company, let's just think from a company's perspective. Suppose I'm a profitable company, I'm earning every year, and everything is going good with my business. So I'll definitely show right things in the annual report. I'll tell about my profits, I'll tell about my vision, I'll tell about the operations of the company, right? But what if a company is running in loss and the business is terrible and they don't even have any vision, they don't even know what's going to happen to them in the next year, and they're just taking debt and their losses and like this? So what to do? What will the company do? Just think from the company's perspective. I'm a loss-making company. I don't want my shareholders to take away their money. I don't want my shareholders to sell their stake. I want them to invest more and more so that the share price increases, right? Now for that, I'll try to manipulate, I'll try to write something in the annual report so that people find the annual report really good. I'll try to make it fancy. I'll try to just add some new things. I'll try to cover up my losses, right? So all these problems have to be identified. So guys, I'm going to tell you 6 points which you have to focus on so that you can identify a fishy annual report. So let's begin with point number 1. Watch out for those annual reports which are full of pictures and they look very attractive, because the aim of the management over there is to actually divert your attention from the financials area where it might be full of losses to the good looking annual report which might catch your interest and you might start investing in it. So let's move on to point number 2. Avoid those companies which say that their industry is the future of the world. Because we're not here to study about the industry, we're here to know about the business. So let me give you an example about this. Back in 1990s, there were many internet companies coming up, and they were just saying that internet is the new future. So everyone got convinced by that and they started putting money into any random internet company, which eventually led to a stock market crash in the early 2000s, and many of the companies went to bankruptcy. You understand my point over here? So we have to focus on the business, not the industry as a whole. Yes, industry is a factor, but if the business is not running good, then what's the point of the industry booming up? So let's move on to point number 3. Now, there might be times when a company's shares grow by twice or thrice within a single year. And if the management is trying to give an explanation for this, then there's no point. How can a share price move 200% or 300% if the business is just growing by 20 or 30%? The share price is an indication of the business itself, and if the business is not growing, how can the share price expect to grow? And if the management tries to give an explanation for the same, there's something fishy about it. That means the management is doing something behind the scenes and just wanting the share price to grow up instead of the business. Now let's move on to point number 4. Now suppose a company is making many acquisitions to expand its business from different countries or expand its business within a country itself. But there will be a problem if a company is expanding businesses just by acquisition and it's not focusing on its internal business. So watch out for those companies which are just making acquisitions, which are making constant acquisitions instead of focusing on the business itself. The business should grow within. The business should grow internally rather than by just having acquisitions. Now let's move on to point number 5, where a company or the management blames an economic crisis or a financial crisis for the loss of the company. But that's not good actually, because the main part of the business, the main challenges of the business are during financial and economic crisis. If the business is not able to sustain during these times, how can you expect the business to sustain in the future? And if the management doesn't talk about how they are going to face these challenges in the future and just keep blaming the past events, then the company is definitely in danger and you should not invest in those companies. So let's move on to our last point, which is point number 6. There might be companies which will be having a lot of cash and they look really attractive, and you would definitely want to invest in those companies because they have cash and they can sustain in the future. But what if I tell you that company is full of debt? Let's take an example. A company has 1,000 crore rupees of cash. That looks good. But at the same time, the company has 2,000 crore rupees in debt. Now, is there any benefit of those 1,000 crore rupees of cash when I already have 2,000 crore rupees in debt? All of my cash would be paid in my debt, and I'm actually in a loss, not in a profit, right? So always avoid those companies which are full of debt and the cash reserves are less than their debt. Now I'm going to give you 2 examples, one of a good annual report and one of a fishy annual report, or where I would say the management is not actually good. So here guys, we are going to discuss about two annual reports where I'll be also telling you about which parts of the annual reports to focus on and how you can identify a fishy annual report, right? So this is the annual report of Marico of financial year 2019, and this is the index page, and the main things that you have to focus on in any annual report are, first of all, the financial highlights of an annual report. This will tell you about the past performances of the company, whether the sales have been growing of the company, whether the profit has been going, whether the company has been paying out dividends to its shareholders, and many other things. Now, after this, you have to read the chairman's message and the managing director and CEO's message, because this will tell you about how the senior management of the company sees the company and how it sees itself in the future, what the vision of the company is in the future. So, these are two very important parts of an annual report. Now, moving on to the next part, the management discussion and analysis is what you have to focus on. This will tell you how the business is being conducted and about the management and the risks that are there in the business and how they overcome those risks. So, all of this will be told to you in the management portion. And remember, guys, that after reading the management discussion and analysis, if you get to know the company as the company's management would be knowing, then only it is a good company. After reading the management discussion and analysis, if you can definitely say that I know the company as good as the management knows the company, then it is a good annual report, and it is a company that you might consider investing in. After that, this part is one of the most important parts in the annual report. Financial statements of consolidated financial statements just means that the financial statements of the company itself and its acquisitions. And standalone, as the word standalone says, that it just tells the financial statements of the company, not its acquisitions. So we'll be looking at this annual report. This is the annual report of Marico, and along with that, we'll be looking at the annual report of Whirlpool. So first, let's start with the Whirlpool annual report. Now, as we can see, this looks like a good annual report, and these are just some of the information that they have given, the past performances of 3 years. Along with that, this is just the index page. Now, let's move ahead. This is the letter to the shareholders, which is written by the managing director. And to be honest, this is a very short letter in which he hasn't really explained anything. Along with this, as you can see, the chairman's letter, like, it's so small. He hasn't even told about the vision of the company, how they are expecting the company to grow, what they'll be doing in the future, and what the company is going through right now. Are there any difficulties the company is facing, or is there any good part in the company? What are the economic trends and how they're affecting the business? Nothing has been explained by him. As you can see, all these are some of the reports that are written by the senior executives, the senior management of the company, but they haven't actually discussed anything, like very little. And even after that, this annual report is full of pictures and it's just basically branding. I'm not saying Whirlpool is not a bad brand, it's a really good brand in my eyes. And I really do consider it as a very good brand. I was thinking to invest in this company, but after looking at the annual report, it just shocked me. It doesn't tell me anything. It's just full of pictures and pictures of its washing machines and its offices. Like, what is there? I can't find anything in this annual report. But there's one point to be noted. If you go to the financial statements of this annual report, they're actually pretty good. Like, let me move to the financial statements portion. So in these financial statements, you can see actually they're pretty good. The loans of the company has is not that much, and they haven't been increasing by a significant amount. And actually, the business has been growing. There is no such bad thing in this business. The cash, they have surplus cash also. Bank balance is also increasing over the years, and there's nothing much bad in these financial statements. But when a company is not able to explain about its management and it's full of pictures, just like I mentioned before, I wouldn't actually trust that company. I don't even know what they're going to do. And even if something bad happens with the business, I won't be confident that the business will be able to grow because the management doesn't openly explain everything to its investors, to its shareholders. So I wouldn't really go for this company, and it looks kind of fishy to me. But on the other hand, if you see the annual report of Marico, just focus on these parts. Over here, they have explained their brands, they've explained what are their products, and the different countries in which they have expanded: Vietnam, Bangladesh, Myanmar, and what are the products they have released in these countries. Along with that, they have given the past performance, the business performance, and how it has been growing in a really good manner. And here is it, the report of the chairman to its shareholders. This is the report I'm talking about, where he explains everything of the company, how it looks in the future, where are the areas that it's focusing on, how it's focusing on expanding its business, what are the macro environment, how the global financial conditions are affecting the business, and how they plan to overcome the effects, the negative effects of the global scenario. Look towards a sustainable future. They have explained literally everything. You can compare it to the Whirlpool uh, letter of shareholders written by the chairman, and it was nothing. But here you can see it's a lot, where he has explained many things. Then comes the report of managing director and the CEO, where again they have explained how the business has been growing and how they expect the business to be growing, how they expect the business to be growing in the other countries where they're expanding, whether it's Vietnam, whether it's Bangladesh, whether it's South Africa. And as you can see, there's a lot that he has explained. After reading these annual reports, these look boring, but these are the annual reports which actually tell the shareholders everything that they need to know. Over here, they have explained their products, which products occupy how much market share, which are their leading products, how do they plan to expand through these products. So that's all explained. Along with this, the risk management is also explained. They have given a proper information about their products. All the products have been properly explained. And it's not just pictures, it's actually information that you're getting from this. After this, they have also explained about the risk management. If something happens to their business, how they're going to respond to that thing, whether it's competition, whether it's a new player that comes into competition, or how does it plan to expand when it's leading to saturation. All these things have been explained properly. Now, here we come to the management discussion and analysis portion where they have given so much information to their shareholders that I can literally understand their business as good as the management does. They have explained the businesses not only of India but the different companies in which they have expanded to, and how they are planning to expand, and how they're planning to penetrate into those countries, and which country shows a good or better growth potential. Like Vietnam, they especially mention how it has been growing and they plan to expand nicely over there. And they're also explaining about their products once again, and which is their best product, leading product, the coconut oil and the other value added oils, and everything. Let's come to their financial statements. As you can see, the financial statements are actually really good. Like I haven't really taught you right now how to analyze them, but as I'll be telling you, you'll start realizing that these are good financial statements, and this company uh, barely has any loans. And on the other hand, if you look at the cash equivalents and the bank balance of the company, it has been growing, and assets of the company are good. Like there's no risk in this company. It has been properly explained. Along with this, if you notice the profit, it has been increasing over the years. So that's actually a good thing about a company, and that's what you have to look into. Even if you see the net cash generated from its operating activities, that has been remarkable and growing at a good pace. Even the total cash. So this is a company which we are looking for. It looks really boring, but these are the companies which we have to understand. And I would recommend you not just to read these portions which I have mentioned, but in the beginning, go through the entire annual report. You'll get to know much better which parts are really important for you and which parts you have to focus on in the future to read and understand the business as well as good as the management does. From the next video onwards, we'll start with financial statements. Thank you.